Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
And welcome. This is the Investor Coaching Show. I am Paul Winkler. Talk about money and investing around here. That's what we do. You know, the more educated investor, I believe the more educated you are as an investor, the more confident you are as an investor, the more confident you are as an investor, the more successful you are as an investor. I think it's an important little combination. I think it's tremendously important because too often people are just blindly trusting the investment industry. I'm not a big fan of blind trust. You know, that's what I often talk about with regards to, I hear these commercials. We're a fiduciary. Fiduciary. Fiduciary, I think is, there. You know how you look in a dictionary and you'll have different definitions, for a word. You'll have multiple definitions for the same exact word and you go, okay, which one is, and you look at context and you try to figure out which definition is being used by the speaker. Well, I think fiduciary means you're keeping somebody's best interest first. You got to put their interest before your own. But I think there's an alternative definition, which is you can blindly trust me because I'm going to put your best in, because you think I'm going to put your best interest first. And, I find that so often that people just go, you know what? I'm working with a fiduciary. I don't have to think about this stuff anymore. And I am adamant that no, you better think about this stuff, because the second that you put your guard down, there'll be somebody selling you something and you'll be signing some piece of paper that says, in this particular transaction, we're not acting as a fiduciary. And that's exactly what firms do. I'm telling you, it is exactly what I hear in commercials all the time on Nashville airwaves. We're going to be a fiduciary. And then on the other hand, we got this product and it's called an annuity. And then you hear, insurance guarantees is based on the, in the fine print, in the fine speakage at the end of the commercial, you'll hear them taking away everything that they just gave you in the commercial. They'll say it a lot faster. Now, this is the thing you got to be really, really conscious of, making sure that you don't have to know everything, but there are certain things that when you start to understand some of how this works, you're no longer that person that can be taken advantage of. That's what I believe strongly. Now, a lot of times investors learn by their own mistakes. I wish they would learn by other people's mistakes, but a lot of times it has to be their own mistakes. And there was something in the Wall Street Journal that I want to bring to your attention because it was something that we dealt with here. I remember one day I was driving down the road, and I remember I was on this exit ramp in Nashville. One of the I guess I was coming off of Ellington or something like that. I think it was, and all of a sudden I'm hearing Pamela Furr. She was running the show for somebody. She was actually guest hosting for somebody, and she was filling in for somebody. And she says, "Anybody can explain to me what's going on with GameStop?" She said. If anybody can explain that, please help me out. And I was like, I pulled off the side. I said, Pamela, it's your buddy Paul. Let me explain this to you. So I walked through what was going on, regarding that. And, and here's basically, what I was listening to the financial channels this week. And this was basically something that was being talked about as well. And they call these meme stocks. Now, the meme stocks have been changing. You have GameStop was one of them, and you have AMC. But, when I was talking to Pamela, I said, this whole thing, watch it. I didn't realize, because I didn't really I don't pay attention to individual stocks that much. But I said, GameStop, don't get involved in this. Don't get excited about this. And somebody actually called after me and says, well, Paul's really smart and everything, but I think he's wrong on this one. No, I wasn't wrong. It went down 74% according to this article, 74%. And then there was another one that I had talked about here on the show, AMC. And I said, don't get excited about it. That went down 99%. Like 99. Oh my gosh. But they were talking a little bit about the things that people are doing right now, and I heartily agree regarding their conclusions.
By the way, there's just meme stocks that run every day. And
there's meme stocks.
Joby, I said Palantir, 50 to 100.
There's pockets of speculation in this market that we pointed out. We'll continue to, because it may be worrisome sign to some.
It's led by Bitcoin.
Well, Bitcoin, you can put it in the speculation basket, but at the same time, how many companies, we were just going over these numbers, are raising money to buy Bitcoin?
That's it. They're borrowing. And we talked about this a couple of weeks ago. I said they're borrowing money. They're borrowing money to buy Bitcoin. And, the thing that you go, what on earth? And more about this in just a second. Because they're borrowing money to buy this, they've got to pay it back. And you are hoping, like anything, that it goes up in value, and it goes up in value more than your borrowing costs. It's crazy.
Well, it's enormous.
I was offered a chance to do it. I said,
far more than has been raised by companies going public.
It's because...
I mean, think about that. A company wants to go public. They're raising money to go public, to become a public company, and they're raising more money to buy something that is just basically zeros and ones on the internet. It's like, what?
It's almost encouraged. I mean, the SEC chief is like, good work.
This is a very crypto positive administration, no doubt about it.
Yeah, well, that's it. And, they're crypto positive, but the thing is that the bill that just came out, and I've talked about this, has been regarding stablecoin, which is not an investment, but it allows for making some of the banking system and making some of the transactions, making them more efficient. And I would agree with that particular aspect of it. But as an investment, no. I mean, I'd heard Trump himself say, when somebody asked him what Bitcoin was going to do, he was like, who the blank knows? That was his comment. And I played it, his comment here on the show. And he doesn't know.
That's been a real positive for all of the different.
Saying it's also a great hedge against the budget deficit.
Well, it may be seen.
Which is what it is.
Michael Saylor would say that, right? Store of value.
I was with someone whose son took his paycheck and bought Bitcoin. I started a job, a good job, 5 years ago, and now...
Now, that sounds good, right? It's a store of value, but let me give it that in just a second.
It doesn't really have to work. And he's totally hedged. The kid's hedged. Father has to work. I'm not kidding. The kid's hedged. Look, I mean, this is happening.
And it is. It's nuts what's going on. Well, they had this article saying the latest meme stock craze won't take down the overall market. And I agree, because when I look at this type of speculation, people are speculating, they're going crazy. You don't have to participate in it, is what I always say. You don't have to get out there and do this. If they speculate and a stock that's inside your portfolio goes up like crazy and then comes crashing down, but you didn't buy it or sell it, it didn't affect you. So don't worry about these fluctuations driven by traders that are trying to figure out what's going to happen next. And, that'll happen. When you have an investment portfolio, there are going to be some people, and the reality of it is if you got just a couple companies, that's what meme stocks are. It's just a few companies that people are trying to gamble on the direction of, and they're trying to move that particular market. You don't have to worry about it, because if you're not the one buying and selling it, who cares? It doesn't really matter a whole lot. So that was one of the things that was being talked about regarding that. But, and we talk about Bitcoin, it's as a store of value. And we've often people talk about gold as a store of value. And I've said, well, it can be a store of value, but recognize that when inflation was super hot in the 80s, that gold actually went down in value. Recognize that its correlation with inflation is non-existent. There really isn't any correlation. Now, you can look at short periods of time and say, oh, wait, but when inflation was hot at this point in time, it went up. And that's what happens. That's what statisticians do. What they'll do is they'll cherry pick periods in time when the correlation seems to be there, and they will actually play upon that. Now, one of the things that you find is that they tend to do that because they're trying to sell this particular product involved. But it's been just interesting to see what has been happening because Bitcoin was sold as this idea that it was a hedge, that it was a protection. It was something that would protect us from the devaluation of the stock market and our stocks going down. That was what was talked about.
Relationship worth tracking is Bitcoin versus gold. It has now moved much more in favor of Bitcoin. Gold actually backed off on that Fed announcement yesterday, and it's flattened out here. This basically shows you, by the way, this was the risk-off period, right, around when the NASDAQ peaked in late February, and then you had the tariff panic. Bitcoin moved with big growth stocks, and gold was the haven. And now you see them coming back together. So obviously, it's sort of revealing every time we see one of these moves how Bitcoin behaves because of the people who own it and what they sort of believe about buying a piece of the future, guys.
Okay, did you catch what he said there? He said that Bitcoin moved with big growth stocks. Now, remember that over the past few years, this is something I've been talking about, that you look at big growth companies. What are they? They're companies who have a high price compared to their assets. So it has a high price compared to assets, and it can have a very high price compared to earnings. So you might have a company selling for, back in the late 90s, you had companies selling for 100 times earnings. Well, the historic norm for the S&P 500 is 16. They were selling for over 100. Now you have these big growth companies selling for 20, 30, 40, 50 times earnings. Now, if you turn that over, that gives us our earnings yield. So if you have a $50 price for every dollar of earnings, that's a 2% earnings yield. That's it. So if you look at that and go, wow, what's that compared to norm? Well, the norm is a little bit over 6. And then you have growth in earnings. So if you look at these companies, they're selling for very high prices. And why? Well, because people think that the future's so bright they're wearing shades and they're willing to pay very, very high prices for these things. But if you have this thing that you think of as being a hedge against stock market downturns, and yet it moves very much with large growth companies, the very stock market you're trying to hedge against, it's not much of a hedge. And that's the problem. Now, he talked about it in glowing terms, and then what just happened a couple days later, he was saying that Bitcoin is in favor of Bitcoin. You heard him say that in that little piece. Well, what happened is a couple days later, just the opposite happened. 2 days later, Bitcoin goes down and gold goes up. So if anybody listens to that says, I'm on to something, this is a really good thing. And now what's happening is you have companies like Krispy Kreme and Open Door Technologies and Rocket and Kohl's and these are companies that they're the new meme companies. And a lot of investors get excited about this stuff. They get excited about penny stocks, for example. And I said, meme stocks are back from the dead. Penny stocks are soaring. I remember penny stocks back in the day when I first opened this company. I would get these. Back when you had fax machines, yeah, that far back, you get these fax machines, and I would get faxes on the companies that I had to buy. Oh, you need to buy this for your clients, Paul. Need to look out. This is going to be the up and coming. So this isn't anything new. But these companies were penny stocks, or their prices were very, very low. And the idea being that this thing was going to take off. Well, what would happen with these companies is they were so thinly traded. In other words, you don't have a lot of shares trading on a day-to-day basis. And one of the stories I like to tell about this was a lady that comes into the office here. She comes into my office and she sits down with us. And we had been fixing just all different parts of her investment portfolio and her financial life and all of this stuff. And she comes up with this little account. She goes, Paul, what do I do with this? And I can't remember. One of my guys was sitting in there with me. And we were sitting there talking to her. And I says, let's get Schwab on the phone. And so, my guy picks up the phone and calls Schwab and says, okay, we got this lady that's got this stock. And she had probably about $2,000 of it. It wasn't much. Maybe it was $1,000 or $2,000 worth of this stock. It wasn't much. And it says, well, what should we do? What can we do? Because we were wanting to get her out of it. And the guy goes, you do realize that she owns more of this stock than is typically traded in an entire day. I was like, what? She owns like $1,000 of stock and it's more than it's traded for this particular company in an entire day? I said, yeah. You want to do a limit order? And, so basic limit order is where you sell it. And as long as the price doesn't dip below a certain level. So, if the stock is selling for $2 a share, and you sell it just as long as the price doesn't drop below $1.50. Because as soon as you start to sell this stuff, then all of a sudden you've actually introduced supply into the marketplace that doesn't typically trade much of the stock at all. There isn't much demand for this particular stock in the course of a day. And you've just introduced a bunch of supply, $1,000 worth. And then, to get rid of it, you have to drop the price in order for people to buy it. Because if you introduce it and there isn't a buyer, well, you got to keep dropping the price until there is a buyer. So you might put a limit order and say, I'll sell it if it goes below $1.50, stop selling. Well, we did. We ended up getting rid of it. But, long story short. But that is the idea behind this stuff. And literally, you can have somebody that says, hey, you got to buy this stock. This is a really good company. And, all the time, you don't recognize that they actually own it. And they're just trying to get you to want to buy it or increase the demand for it, because the opposite can be true as well. Literally, by creating demand, the price can be driven up. And when that price is driven up, they can sell their share to you. So they make money off of you that way. So, people don't recognize the kind of garbage that goes on in the investing world, and they get taken advantage of it just because they don't know. And like I said earlier, I would much rather learn from other people's mistakes, but unfortunately, sometimes people just have to learn from their own mistakes. And that's just the world, isn't it? If you got kids, you get what I'm talking about. If you get total compliance, 100, it's actually funny. It's in psychology. They say that if you get 100% compliance with your children, it's a bad thing because it means that they're not being themselves at all. But you want a bit, but sometimes it's just going to happen. That's the way people learn things. Learn things through challenges that we go through. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.